Hello, one and all. Welcome to another live webinar with us from Phillip Futures. We have a very special guest in the studio today. It's none other than Michael Sin. He's with SGX and he's the head of equities at the Singapore Exchange. And with Michael is none other than our CEO of Phillip Futures. And they are the industry veterans, or so we think. They have seen the what's been happening in the markets over the years, the ups and downs, and will be able to share with you insights about inflation. And also, one of the key points that they will be discussing today is whether traditional inflation hedges rather are they still the horse that we should count on to bring us through this race and towards victory. All right, and they will also discuss some inflation hedges that you probably have not thought about or should consider adding into your portfolio. And also, what about ETFs and ESG? Something everyone is talking about. If you have any question with regards to what we are covering today, just type them into the question box and we will get to them right at the end of the session. All right, the question box is on your control panel, is somewhere at the bottom. If you can hear me loud and clear right now, before we begin the session, please type a resounding yes in the box. All right, thank you so much, Adeline. Fanti, thank you. Thank you for confirming that you can hear us loud and clear. All right, Chern, if you're all set to go, I'll hand the reins over to you.
Okay, thanks, Sri. Thanks for the intro. Mike, thanks for joining us on this special night. I suppose you can hear me. It's Mid-Autumn Festival. It's a time of reunion, and instead of being with the family at this moment, we have a reunion over the GoTo webinar.
Thank you for having me. Really. I really appreciate the opportunity to be with you all today.
Yes, thanks, Mike. I think we are thankful and we are honored to have you with us today. This is we had this inflation chat for a few series, and over the past few months we had different topics, and that includes like the price of a chicken rice. I was sharing that, you know, many years ago, chicken rice used to be $1 or $1.50. Now you can hardly find it at $3, and more likely to be $3.50 and above, right? And even a cup of coffee has increased in price from like $1 to almost like $2 nowadays. So, and we are seeing that the impact of inflation, which is very real, and is certainly somehow, as my parents used to tell me, the money will only get smaller and smaller over time. So certainly we are happy to have you with us today and to hear from you, to learn from you as well. Now, for a start, there's certainly, for those people who know Mike, is certainly more than equities. We have been following him as a loyal SGX member, right from the future side, commodities, currencies, and now we are also following Mike into the equity space as well. Just as for a start, perhaps, Mike, can we hear from you? All these things about inflation, how do you see inflation? And personally, how do you see that affecting you?
So thank you for the question, because it is actually a terrifyingly big question. It's very interesting that you use the examples that really made it real for people, where, because we're veterans, that means we are not young anymore. We can remember when it's 20 cents small, 30 cents big. But this inflation thing is actually a very fundamental thing in keeping the world stable, because any place where inflation is too high makes society break down. So the way I think about it is to try and be very precise in thinking, what are we looking at? So most people think inflation is the price of a thing goes up. Actually, I think it's better to think of all things that you want to own or buy as an exchange rate. Cup of coffee for some money, right? Because then when you think about that, we actually have some good case studies, and I will use Malaysia as an example, okay? Because when I was young, go on holiday in Malaysia, it wasn't that long ago, but RM1 is $1, right?
Yes, that's right. That's about 35 years ago.
That's right. So over 35 years, if you still earn your money in ringgit, but you have to buy your things in Singapore dollars, automatically the price has gone up 3 times more than somebody who was earning in Singapore. So to me, a very simple example there is to say, actually, when you experience inflation, you must look at what you're buying with what. Because for many of us who are living in Singapore, where the kinds of things that you are trying to afford, right, is not subsistence things. You're not trying to buy an extra kilo of rice. The things you're trying to buy with your investments is either goods, some important services, healthcare, education. Actually, Asians have one more thing. I want to have enough money to even hand on to the next generation. That's unusual. Huh? Not everyone has that problem, but that's a big inflation problem. And then finally, I'm very scared I might live forever, so I need a lot of money. So all these things occur to modern Singaporeans because we are richer now. But very importantly, if you live in Singapore, a lot of your costs are in Singapore dollars. So my first point about inflation for people who spend time in Singapore or spend money in Singapore is don't forget that the things you're spending on are in Sing dollars. So if what you're buying and earning is only in ringgit or in rupee or in RMB, and you forget that one side is getting more expensive faster than the other side, you have to watch that. Which is why one of the easiest things I always tell Chinese New Year, like relatives say, "Oh, you work for the exchange, right? What can I buy?" I'm like, "Look, if I knew what to buy, I wouldn't work in exchange, right? I'd be retired, I'd be a millionaire." But actually, one of the most sensible things you can do if you are based in Singapore, you have some wealth you want to put away, is REITs and some of the high dividend stocks in Singapore. Very simply because those are Singapore dollar assets. They give high yields, and down the road, a lot of the things you have to spend money on is Sing dollars. Okay, so I'll begin with that as part of your portfolio. Then there's many other places to go depending how much risk you want to take and what your view on inflation is, because actually inflation comes in many things. It's not just one thing.
Okay, Mike, just to interrupt you, you really work for the exchange, although I always felt that you work for passion, okay, rather than the money that comes with it. And you straight away you jump into part of the portfolio could be REITs. Yeah, so I will come more to that later. But again, since today is a Mid-Autumn Festival, actually I also prepared a 5-year chart, okay, on the price of mooncake. It basically shows that the price of mooncake, of a box of mooncake, has increased in price. Using Mandarin Hotel as an example, a price of the mooncake has increased from the price of $65 in 2014 to a price of $76 in 2018, and chances are it's above $80 now. And the other part of it is that I also look at the recent review on all this inflation on the mooncake. One, they put down cost of ingredients has gone up. Second, they put down like the cost of shipping, right? So, and in this aspect, I also would like to tap your expertise. Do you see such inflation, right? Just now one is with reference to your Sing dollar or the ringgit. And then now in terms of the mooncake, when they talk about shipping costs, ingredient costs, do you see such inflation in mooncake prices? Are these what we call it transitory due to COVID, pandemic, shipping disruption? So it's just, it's just for a while? Or do you see such inflation is there to stay?
Okay, So my view is going to be hedged because I'm going to try and refer to what history tells us, okay? So what do we really have long history on? The longest history we have is on interest rates across the world, 5,000 years. But you have to look in very old places, look in the Bible, you look at the Sumerian texts. And basically, roughly over a very long period of time, interest rates is always around 20% for a long period of time, until the Roman Empire, where interest rates went down to almost zero. Then went up to 20% until the 1970s, 1980s, where Paul Volcker crushed inflation. And then now interest rates have almost gone down to zero. So what is the reason why interest rates went down so low? Is because there were two empires. One was the Roman Empire, and most recently is the global trade empire, where everyone is trading with each other so freely, no interruptions, no wars, no nothing. Money moves freely, we trust each other, we trust banks, that the system becomes very, very efficient. I want to eat sushi today, or they can fly tomorrow morning, something like that, right? This is called the just-in-time economy, where everything is integrated. You know, Apple, who's based in California, builds a phone which is made in Taiwan from chips which are made in China and then finally assembled in California. So the world is one big factory. But the example of the mooncakes and the example of COVID tells us that maybe this period has come to an end. Okay, so I'm very confident that because of COVID, many of the things that we assume would happen smoothly will no longer happen smoothly. We're not going to exit fast, even if COVID is no longer an issue. I use the example of, for those of you who travel, yeah, all the things that were put in place at the airport after 9/11. In 9/11, a long time ago,
20
right?
years.
That's right, 20 years. Nothing has been reversed. Today you fly, there's a scanner, you take off your shoes, your liquid allowance is still 100 milliliters. So there's something about the world where all these protection measures, once they introduce, takes a long time to reverse. So just as when you travel on a plane, you are still reacting to the incident 20 years ago, I think it could be a long time while a lot of these COVID things will continue to be in place. So what does this mean? This means that global trade is going to be disrupted for a long time. When you want to drive your vegetables through customs, you want to ship things through, it will just be more slow and less effective than it used to be. So the cost of moving things around will become more expensive. Then, so if you believe that, you believe this is permanent, then what kinds of things will become expensive? What kinds of things will not? I think things which are naturally grown or prepared only in a certain place, let's say ling yong and sugar, right, for your mooncake, those things may go up in price because it's just less efficient to ship. Tomatoes, seafood, all those things may become more expensive because it just costs more to get it to you. But things which are manufactured, made by machines, made in factories, actually, I don't think they will become more expensive. Because if you think about it, over the last 30, 40 years, everything has always gotten cheaper. Our computer now is 100 times more powerful, same price. iPhone every year more powerful, same price. Why is this? Because if it becomes too expensive to ship things here, in future, in the very near future, the technology exists to just 3D print the thing. In future, you don't have to assemble a car, you know. A factory in Tuas will have 3D printers that can print out the car. So one is about things where technology doesn't make it more efficient. So I think things like agriculture, food, or things which are being controlled or running out, you know, fish. The other kinds of things are consumer goods. So when you think about inflation, one goes up, one may not go up. You have to ask yourself, how do you spend your money? Do you spend your money on things which machines can make? Then I'm more confident that the price will stay down. Or do you spend your things on money where you need humans to produce, sort of medical care, teaching, farming? So I believe those prices will go up. And then we can talk about how do you invest against that or hedge against that.
Wow. Wow. So Mike, you mentioned the word veteran. So initially I thought the word veteran only refers to you, but not to me. Okay. And
You look young.
especially
You are very blessed. You have a baby face. You know.
but especially after
Good
you mentioned
complexion.
about the Roman Empire, all these, I think on top of being veteran, I think you're certainly a very well-read person over there, right? And certainly our customers today will benefit a lot from your insight. But I know that SGX, is one partner that we have been working together for years, and I know that you are you're instrumental in bringing in new contracts. Just now when we talk about the shipping costs, all this, and we talk about could be even the cost of ingredients or cost of certain goods like rubber, for example. All these are the cost of materials. So certainly within our guests today, some of them could be from the physical side. So in what way can SGX, or what are the products that SGX have that can help some of these physical players to protect whether the cost of materials or cost of shipping?
So there's two fundamental things that we as an exchange can do. One is a share or a stock. It allows you to invest in an enterprise which has all the positive exposures you want, right? So I can invest in a ship owner. I can invest in a company that owns agricultural land. I can invest in a company that maybe produces milk, but you have to be very specific what you're buying. That's an operation. A lot of our industrial customers, let's say you are a steel mill in China. Steel mill, very simple business. I buy iron ore, I buy coking coal, I buy electricity, I put in a machine, and then steel comes out, right? I'm just an assembler. But I'm very, very sensitive to the price of my raw ingredients because I must buy my raw ingredients months or years ahead, and then I must sell only when it's ready. Yeah. So no different again from Singapore Airlines. I must sell tickets, but I better buy my petrol first. So these companies typically use commodity futures. So this is one of the three big classes of futures that we have, or derivatives that we have. One is commodity derivatives. And this is very well used by people either to take hedging against a risk that they want to reduce, or sometimes people say, I want to put on a position because I think it's going up. Commodities can move a lot because commodities are things that are shipped around. And also importantly, they can be interrupted. Like let's say there's a thunderstorm or there was a fire or something like that. So actually in the past 12 months, if you were not an investor, but really a trader who was looking very carefully at COVID and knowing that China really wanted to pump up its economy by doing more buildings, supporting employment, what happened? They have to import more iron ore, and the price of iron ore futures doubled. You know, the performance has been better than Bitcoin, okay, in the past 12 months. But sway in the last week, China decided, oh, we must also clamp down on some of these people who are getting too rich on property. Some of you may have heard about this company called Evergrande. Then what happened? Iron ore halved again. So one thing I would say is that when it comes to inflation, commodities are actually a very rational way to say, in the long term, I think gold is going up, lithium is going up, rubber is going up, but it's very, very volatile in the middle. Yeah. So commodities, it's one class, and it's very important to us because Singapore, in our history, is actually a commodities hub.
Okay. Thanks for giving the insight on the commodities market and what to look at. Whether it's, I hear things like gold contract, iron ore, right? Now, certainly the other big portion of our crowd today, I won't be surprised, 90% of them have invested in stocks, right? And looking at your background, you are from investment banking, you also do investment management. The assumption is that you have done very well for investment. And can
If
you
I did
share
very, very well, I would be retired already. So
like I said, you work for passion.
yes, yes.
Yeah. So can you share a bit with us on your investments, and of course, what are the and then after that, within SGX itself, you have so many different asset classes, so many different type of stocks. So any specific sectors that you recommend people to look at?
So I want to be careful about sector recommendations. Firstly, it's not something I should be doing. So I want to stick to inflation. And if you think that what may happen soon is recovery, normalization, how do you think different segments of the stock market will react? So I would say two things I have strong belief are true, that in the near future will continue to be true. One of them is the pressure from something called ESG. We'll talk about that later, right? ESG pressure. The second one is this idea of rotation, because since COVID has begun, what has happened is a lot of value stocks. Stocks, you look at them, they're like, wow, I understand your business, good cash flow, low multiple, high yielding. Actually, they continue to be low. They have never really been this cheap before relative to the growth stocks. Okay. So the growth stocks are almost entirely the new economy stocks. What is the reason for this? Is it one reason? No, actually, it's multiple reasons. One is the momentum that COVID did to a lot of these new economy businesses. Whether you order more Grab food, or you use more Zoom, you use the computer more, somehow people thought, wow, if this COVID goes on forever, I'm just going to sit in my house, do everything on the computer, and I never have to go to the world again. So people stopped buying shopping centers, they stopped buying things which are outside, they stopped believing that there was value outside of their digital world. This has moved a long, long way. You can find lots of charts which show analysis of value versus momentum or value versus growth. What will almost certainly happen if there is recovery from COVID is that all the central banks and governments in the world who have been borrowing a lot of money and throwing money into the economies, they will stop doing that because they have run up hundreds of billions of dollars in debt, trillions in debt. Okay, governments have borrowed money at 0% for a long, long time. They will then be very afraid of inflation because when people start coming back, the supply chain is not ready to supply their needs. So what will almost certainly happen is interest rates will go up if the recovery is strong. When interest rates go up, value stocks versus growth stocks, that gap will change. Okay? So if you believe that there's recovery coming, inflation will almost certainly follow, or central banks will believe that inflation will follow. Actually, that's more important, right? Rates will no longer be zero. And then value stocks will certainly outperform. So I think that is a well understood phenomenon. And in value stocks, there's no need to pick specific names because actually in a lot of Asia, outside of China, a lot of our stocks in Asia are good value. And some of the best value stocks, believe it or not, is Singaporean stocks. Because a lot of our key big stocks on the stock market here are what you might call Temasek linked companies. The implied credit rating of these names is very high. Like they're AAA gold plated. But when the environment is like that, nobody wants gold plated things. But when interest rates go up, these are businesses that will probably see a lot of global fund managers buy into them. So a lot of our market has that characteristic. If you look at the STI index or the MSCI Singapore index, most of it is well constructed around value. And because it's in Singapore dollars, remember my first point, you're hedging against inflation. You must hedge in Singapore dollars because your costs will go up in Singapore dollars. And while I'm talking about this, I should do a shout out for Chern because Phillip, in a different arm, in the fund management side, will soon be listing quite interesting products for Singapore. Leverage, upside, and also inverse. You want to bet up or down, you can do it through ETFs that Phillips are doing.
Yeah.
So to me, that one is a very simple, actionable thing. If you need to spend money in Sing dollars, value versus growth.
Yes. Thanks, Mike, for sharing. It's true. That is like the ETF. You can participate in the increase or decrease in the index value. Right. That's one ETF that the group is looking at shortly. Yeah. So I hear from you, growth versus one is the growth stock that we can look at, and the other one is the tech stocks. Yeah. And the other thing is about, I think I shared earlier on that now that you have ventured into equities, so we as loyal followers, we are going to start our equity business soon as well, right? So meaning, notwithstanding that we are Phillip Futures, we have done other asset class, now we are also going to offer stocks. And one of the things that we are focusing on is education, and perhaps for, I don't know whether it's called veteran or for older citizens like myself, right? One of the things that we will focus a lot will be on REITs, and the other one is on ETF, especially like on the index ETF itself. So something that can participate in the long-term growth and with good dividend yield. And of course, where REITs are concerned, we also look at it as a exposure to the property market as well. So SGX being the dominant player in the REITs market, especially in this Asia Pac region, would you like to share a bit more about one of the idea is that property is always known as something that's a good hedge against inflation. Is it true? And then if property is a good hedge against inflation, we know that to have multiple property in Singapore, it probably needs people like yourself. But for the general public that do not want or not possible to own multiple properties, you see, what are the gateways for them to, to have the exposure to the property market in Singapore or in this region?
So thank you for that. And this is actually a very powerful Singapore strength, right? It's interesting that our stock market and our ecosystem here is so strong in REITs, and that's because there's a lot of people here who understand properties very well. But our REITs market is not only a Singapore REITs market. That means the properties inside the SGX REITs is not just buildings in Singapore. It's actually very international. US, Europe, Japan, a little bit of China, lots of ASEAN. So our REITs market is fantastic because the underlying is not only in many countries, but many different kinds of property. So I can tell you over the last 2 weeks, the kind of so interesting stories I'm hearing about why certain kinds of property have special stories. So in the past 1 year, because of COVID, a few kinds of property definitely went up. Rental went up, price went up. One is warehouses. Because Shopee, Lazada, Taobao, all these guys, they really, really need more and more warehouses to store things and ship things. So warehouse rents are super high. So those REITs which have warehouses, they have done so well. Another kind of REIT actually owns what is called a data center. It's a big factory where it's just computers, right? And again, over COVID, so many people use Zoom. Zoom is responsible for like 100,000 square feet of computers just to use Zoom on the cloud. So data centers also went up. So what about looking forward? Well, looking forward, there are 1 or 2 Singapore REITs, I can't name them, but Phillips will help you, who own student accommodation. So let's say student accommodation in UK. So my children are there, so that's why I still have to work. They tell me that the rents for the dorms have gone up 40% in 1 year. Why? Because all the universities and landlords have suffered in the past year. No business. no money, but they were still spending. So what will happen is everyone has said, hey, you know, all the students are coming back from Asia. Number two, they will come back because England and Europe are free. You know, you can walk around without a mask. It's not like in Asia still. So all the students now, a year ago, they were all running home, right? But what all the property guys are saying is that as soon as university opens, everyone's going to run over because they just want the freedom, the university experience. And all the student dorm operators are saying, wow, you know, Hosea, they're going to make money. So the REITs with student dorms inside also going to go up. Which are the ones which have not done so well? Well, shopping centers in Singapore, right? But not all shopping centers are doomed forever. Like you would think that because of COVID, you never buy a shopping center again. No, as soon as the price comes down enough and the yield is high enough, it's possible to buy. You know where shopping centers are doing really well? China. Because actually China doesn't have a COVID problem. Everyone is out shopping, they're spending money, they're not traveling overseas. So REITs are very fascinating on SGX because our properties cover so many areas. So either you have a specific view on one REIT, or you can buy an ETF which invests in many REITs on SGX. So the S-REITs ETFs, I think, are quite compelling. If you not only believe in value stocks, but you think a recovery is coming, then property will surely benefit. So this is much bigger than saying, oh, buy good class bungalow or buy District 9, 10, 11. I'm really talking about global demand to use space, to use properties. And properties now means so many things, from student dorms to warehouses. You know what else they're doing now? Cell towers, right? For 5G, because everyone's using 5G. The tower can charge rent. So you just have a piece of metal or a tower, right? But the telephone company will come and say, hey, please, I need to put my receiver up there for 5G. So these towers can make a lot of money, a lot of rent. So people are also putting those into REITs. We don't have it today, but these are some of the ones that we're talking to. So I think that the REITs market has a lot of innovation coming because as human beings, we will always need to use property and land for our infrastructure.
Okay, thanks. So you covered commodities, you talk about REITs, you talk about growth stocks. But one thing, just now you mentioned about ringgit. You know, when it comes to overseas investment, one key area is we talk about 1:1. Ringgit to Sing dollar is 1:1, like 30 over years ago. Right now it's about 1:3.1. And of course, you also mentioned about some of these REITs, they have exposure to the regional in China, maybe in India, their business there. In terms of product offering, what does SGX has to offer when it comes to hedging all these FX, you know, FX exposure, Forex exposure?
So our two most exciting ones, where I personally have enjoyed playing a bit and making a bit of money, is actually the two largest economy in our part of the world, the two most important ones, India and China. Both of them have exchange rates, RMB to US dollar, rupee to US dollar. So let's talk about both because they have both different stories and both are about inflation. India has always had high inflation because domestically, the infrastructure is not efficient. So if I'm a potato farmer somewhere and I want to ship over to another part of India, actually it can be very difficult. Roads not open, and especially over COVID, people not around. So actually prices went up. So what happens when prices go up? The central bank, Reserve Bank of India, must hike interest rates very, very high. Okay. So what happens is that the currency weakens, the rupee starts falling, the interest rate starts going up. Then when you look at the FX, there's something very interesting. Because the FX is buy rupee, which is giving you 8, 9, 10%, sell US dollars, which is only costing you 0%. So in Asia, currencies are a very direct way to play inflation. So if you think that suddenly inflation in India is going to come down, what will happen? The rupee will appreciate. So if I was buying rupee futures, every day that I hold it, I probably make 7, 8%, right? because I'm earning something in 7%, I'm borrowing something in 0%. All this is one contract in a product, future. You just buy the contract. So assuming the price doesn't move every day, I earn 7% divide by 250. But the minute inflation starts coming down, right, it is very likely that the currency will appreciate. Why? Because the country imports many things, right? So that is one way to play Indian inflation while being paid through the interest rate. This is a very common trade, but remember, it's very volatile. So you better watch your stop losses very carefully. But rupee is very, very popular. RMB, China, actually very different because China is so efficient, right? If I want to make something there and ship over there, I can send one bowl of porridge across the city, the opposite to India. But what happens is that in China, the People's Bank of China tries to control the price of its currency because so many of the factories and owners in China actually export their goods, right? From iPhone to car to everything is exported. So they try to make sure that the currency doesn't move very much. So when you look at the currency, it's actually almost pegged, almost linked, except that interest rates in China is 3% and interest rates in the US is 0%. So a lot of investors have been looking at this in the past year to say, wow, this currency is almost pegged, but Chinese fixed deposit or Chinese government bond is 3% and US is 0. So this was a very popular trade in the past 12 months. And what happened? Then the RMB appreciated. So a lot of people made money on the RMB trade.
And you are
Both
one
of
of them.
these are so simple that, well, we help, we only earn a small fee. But it has been very good for our futures because it's the easiest way to participate in the movements of these currencies. And I just want to remind everyone, this is because of inflation analysis.
Okay, thanks, Mike, for the insightful linking the inflation and the currency together, right? Certainly, a lot of men industry are more looking at the economies of the country, and that is a very big determinant of the exchange rate. And certainly, this linkage to the inflation rate is very real, very true. Thanks for sharing this with us. Wow, is there something that you don't know? It seems like you can cover all the different asset class, the different types of investments. Now, maybe let me try a bit harder. Something that the younger generation are very interested in: cryptocurrencies, right?
Oh.
Is there any correlation between inflation and cryptocurrencies? Yeah.
So I really enjoy the technology in cryptocurrency. I don't want to overcomplicate it because actually it has so many layers to it, right? There are some people who just really enjoy the technology. Some people enjoy it in an almost religious way because they're very libertarian. They're saying, I want to support this because it is a statement against the things that I don't like. Right? It's libertarian, it's anonymous. It's very much of this movement that says that through technology we can free ourselves, and we're very anti-government. So that is a very powerful culture. And then there's a group of people who are saying, wow, this one behaves like gold, must be like gold, will go to the moon, that kind, right? So what is the truth of cryptocurrency? First of all, starting with Bitcoin, which was the original cryptocurrency, right? It is very clever because it does two things that nobody had did before. Number one, it said, I'm going to create a network. Okay, it's just a network. This network doesn't require permissions. You join the network. The network only has a number as an address. That means you are not anonymous, okay? You are known by a pseudonym, as if you go online and you make up your name. Hey, my name is Big Dog. My name is Top Cat. So everyone here is not anonymous, but they have an identity. What Bitcoin does is says, I have a thing called a Bitcoin, and this network allows you to send from one person to another person You don't have to know each other. But importantly, once you send, it's done, because everyone is writing it down, right? This is the ledger. So the first technology is using cryptography, right? Computer technology and mathematics technology to say, actually, I can send money or things from you to me, me to you. Nobody needs to know who we are. And no government needs to say, okay, 2 days later, it's gone. Not reversible. But that is not enough, because the thing I'm sending to you could be useless, right? I can send you lots of things on the internet. Doesn't mean they're useful. So the second thing that is very powerful about this technology is they use economics to create incentives within this network for more and more and more people to come in and use it. So Bitcoin took off. And it took off because there were a lot of people who so Bitcoin was published, the paper, right after the financial crisis in 2008. So a lot of people are saying, wow, I can't trust banks anymore, right? I put my money in a bank, the bank can almost default. Where can I put my money? So more and more and more people came in because they didn't want to be with banks. And the price went up, and we all know this. When there's momentum, okay? So people started using Bitcoin to send to each other. So what is the best way to think about Bitcoin today, 10 years, 11 years later? It is a little bit like digital property, digital gold, okay? That's one kind of cryptocurrency. Now, we all know that property and gold can go up in inflation, but this one has no inherent value and very low track record, only 11 years. Anyone can start another Bitcoin network. Tomorrow, we can start a Phillips coin using exactly the same software. You can start many, many Bitcoins. It just happens that this network has value. So my question is, do you think that it can have value in the long term? I think that you can trade this, right? And most people say, look, if you want to put 1%, 2% of your net wealth into it and believe it's an inflation hedge, you can do it. It's a safe amount. The trouble is, unless it goes up by 1,000%, it will never make you enough money for you to be satisfied. So the problem with crypto is not that it's a good hedge or bad hedge. The problem is, unless you really, really believe, you will never put more than 1 or 2% of your money, and therefore it will never save you, because it must go up so much before you can be saved, right? So I think there's room to put some money in cryptocurrency. I would also say that having watched it very closely, the second generation, third generation, fourth generation cryptocurrencies. The second generation one, many of you may have heard of, things like Ethereum, uses the same idea, but the coin is now a computer. So now you can run programs on the thing, right? And people are saying now, this is no longer digital property. Now this is digital infrastructure. Then people are now saying, maybe I can invest in that, because that's like investing in a REIT, right? Yeah. So I think this space will develop. My hesitation in saying that all crypto is investable is because it's still being developed. There will be a third generation, fourth generation. We actually don't know if people will run from one to a second or third. Today, there's about 3,000 different cryptocurrencies. Which one do you choose?
Yeah. So, Mike, I think really you are a veteran with a very young mind and very well read in all this. Is it something that you mentioned your son? Is it something that you discussed with your son, and that's why you ended up knowing so much about cryptocurrencies?
Not at all. This is actually us listening to our customers. So, okay, you know, we do a lot of product launches together with Phillip Futures in particular, one of our strongest partners, and we are so proud of them because they are Singapore homegrown. If I had the best investments, it would have been, you know, Phillip Futures. Phillip itself is not listed. I wish I could buy shares in Phillips. They are everywhere. They're in Turkey. They bought a building in Tokyo, a beautiful building. They have so many businesses and always expanding. As Chern just said, Phillip Futures is now also doing stocks. Okay, yeah. So this is entrepreneurship.
Yeah, we are also listening to our customers, right? As the war between the different asset classes has been knocked down, as things becomes more digital, customers, they want everything in one account, in one ledger. And so we listened to our customers and we felt, okay, it's timely that we start offering shares as well on top of the Forex, commodities, futures. And we certainly look forward to even closer collaboration with SGX in all these product offerings. Look, Mike, I have many questions for you, but it seems like the timing for me is out. But before we move on to the Q&A, I believe Sri must have received a lot of questions from other guests, right? Just now you mentioned about the ESG. You mentioned about the ESG impact on inflation. Would you like to cover a bit more about that?
Okay, so I think it's very important to take it seriously. So ESG is a term that not a lot of people like because it's three different things. One is about the environment. One is about you being socially responsible. And that means everything. A lot of things that even as Asians, we're not comfortable with. And one is something we are very comfortable with, governance. Do the right things, write the right reports, send the right accounts. So if you do all three of these things, you are like a saint, okay? So you can ask, if I'm running a company, why must I be a saint? Why must I be kind to children, kind to animals, all these things? Because the big money, pension funds, they're demanding it. The mood of the world has changed. It has actually been driven a lot by COVID. Somehow, during the period of COVID, people really believe that this is some kind of retribution for human beings not taking care of the environment. Somehow, the story started in Wuhan, right? All these people killing animals, not looking after the forest, germs are spreading everywhere, no hygiene, no reporting, everyone is lying about the disease. So every problem to do with human beings got lumped into COVID, and they said, oh, it's because we are not being good human beings. So the world has entered this movement and it's hit Asia hard. I didn't think it would hit our part of the world so hard. So ESG is important because the big investors who own the money are going to start punishing misbehavior and rewarding behavior. It's not just writing a letter to the CEO saying, hey, please, can you all, be kinder to your staff or give them lunch breaks, don't work them so hard, don't, be bad to the trees. Now they will actually start punishing by saying, I'm going to sell your shares, right? I'm going to write to your board, I'm going to get you fired. So they're starting to do that. And the ones who are doing well, they're throwing big money into it. So why does this matter for inflation? Because for certain parts of the world, let's say oil, right? Oil is viewed as very bad. Fossil fuel, carbon, some things are also viewed as very bad. Companies which burn to clear their forests, right? Instead of doing the responsible thing. So I'm giving you examples from our part of the world. Those companies are going to get stranded because a lot of money is going to say, hey, I'm taking my shares out, or worse, I'm going to fight you. So there's a recent case, I don't know if any of you had followed, but Exxon, big oil company. A small hedge fund who believes in ESG went to all the shareholders and said, give me your vote. They turn up at AGM and their vote is so big, they got two of them onto the board. And now the Exxon CEO is like, okay, I better take it seriously. Because all people have to do is say, hey, I follow your vote. You want to go and sit on the board and scold the CEO. So even Esso has to believe in all these guys. So why is this important for your investments? You have to pay attention to those shares which may benefit or be punished by ESG. And one big factor will be inflation. Because if investors say anyone who wants to drill for more oil no longer gets money or gets punished, what's going to happen? There'll be less oil drilling. And if the demand continues, what's happened to the price of oil? It's going to go up, right? So this is very fundamental to supply and demand. Another example is miners. Miners are generally viewed as, oh, you're bad people. You dig big holes on the earth, and then you leave a big scar, and then you send all this stuff over. So what will happen is these companies have to change their business models. A lot of the big supply chains or the parts of the earth which are being exploited, they will come under big pressure, and this will lead to changes in who is the buyer, who's the seller. It will lead to changes in inflation, right? So there isn't yet an easy answer, because all the obvious ones have already gone. Anyone who makes a solar panel or electric vehicle already too high to buy, right? But it's something important to pay attention to, this ESG thing. It's a new way of analyzing companies, which become more and more important.
Okay, Mike, thank you very much. The way you put it, you talk about the ESG, all these asset class. It really makes me feel even more timely that we are about to start the equity business. Of course, then last week itself, Temasek, right, also announced that they are going to put more energy into making the Singapore scene, the stock market scene more active.
So this is now about Singapore, and we are very proud of what the ministry has done, because I think what they've seen over COVID is nothing beats having your own national capabilities and champions. Because in a time of true crisis, country, your first responsibility is to look after yourself. So if we did not have an airline, do you think we could ship the masks in? No, because every other airline in the world, their people and their government be like, hey, listen, this is now crisis. You look after your own country first. So apart from having an airline and things like that, what else do we have? Now we have to think about the future. And this is where this initiative from the minister came in, which is we have one good strength, which is our stock market. Our stock market allows people to continue investing in companies as they grow. And we have seen that some of the fastest growing companies, name the big ones, Facebook, all that, where did all their money come from? It's not from banks, Banks don't lend money to money-losing companies. Banks don't lend money to growth companies. Investors like you guys on stock markets who believe in a specific Singapore company will say, okay, this one I can back, champion. Today, we have some, they are small. Nanofilm is a very good example, right? These guys are so innovative. They make films for phones, all sorts of technology for films. So what Temasek is saying is like, we think that we are going to support companies who have innovation, can contribute to next generation of Singapore's economy and capabilities, and are listing here, and we will cornerstone the investment. We will put our money in. So that is a fantastic initiative.
Yeah. Thank you. Yeah. You have led the Futures division very well over the past few years. We have grown together with you. Now with you growing the equity markets, I hope we can grow with you again.
Only with help. Only with help. Yes.
I know Sri is out. I think he's chasing want to make sure that we proceed to the next stage of this tonight's event. Sri, over to you.
All right, thank you so much, Chern, and thank you, Michael, for the valuable insights that you have given us. And wow, your knowledge spans so many different sectors and asset classes. Truly a delight to hear you speak about the various assets today. Dear member of the audience, this is a great chance for you to fire away with questions to Michael, and we will pick them up for him to address. But first, since we have one question on the board right now, the question is very similar to what I have. Why would the index be a more valuable proposition as opposed to stocks when it comes to an inflation?
So it is not necessarily more or less valuable in a direct sense. It can be more useful because it is diversified. Okay. So if you choose a single company, most of your risk is that the guys who run it well. So let's say there are 5 companies who are banks, right? One part of your return is when total banking sector goes up or down. One part of your return is this guy a good banker or a bad banker? So if you really love that company and you have those two views, I love banking and I think this guy is a great banker, you should buy that share. But for most people, it is not important to pick the management. My view is actually inflation is going to cause the sector going up. So you buy the index. This can sometimes be very important in diversification because what's rule number 1 of making money? Don't lose money. So if you have all your money and sway, you have it in one bad company and it goes to 0, you've broken your own pledge. It doesn't cost you anything to invest in the index because you are unlikely to lose all your money because of one bad manager. Okay, so don't forget rule number 1 of making money: don't lose money.
All right. Well, I've read a number of reports and I've spoken with a number of analysts. Some of them are recommending that when an inflation is, when we have inflation happening, keeping cash, physical cash, is something that they recommend. Why is this so, and what are your thoughts on it?
Okay, so some amount of cash is always going to be important for two reasons. Number one, you will always need cash. Yeah, remember, you're worrying about inflation not because you're a professional inflation trader. You're trying to look out for yourself, right? So you know, rule number one is you will always need money for things. Rule number two is the way things work in today's modern economies. Central banks set interest rates according to inflation. If inflation is 3%, probably they will set interest rates at 3%. So what does that mean? The money in your current account will probably earn enough interest to roughly stay pace with inflation. Of course, you can't put 100% of your money in the inflation in the bank, because you don't earn enough to outperform inflation. But some amount of money in cash should keep track with inflation, and you will need it always anyway, right? So remember, interest rates also go up and down. In India or Indonesia, I can earn 7-8% on my money. That's because prices go up 7-8% a year. Yeah.
All right, we have a couple of questions in the question box. The first one is from Kelvin. Perhaps something for SGX to consider. Is there an inflation index or inflation ETF that I can simply invest in directly?
So we've looked at this. There isn't a single mega, we call it the Jesus index. This doesn't exist for inflation because inflation comes in various forms. So big picture, what kind of inflation? One kind of inflation is cost push. It means costs go up, it pushes the inflation into the system. The second kind of inflation is demand pull. The cost didn't go up. Too many people wanted it. So between ourselves, we fight to pay more. The guy didn't ask for more. So you must be very precise, like what is causing the inflation? And therefore, no single inflation index will solve everything. Okay. We do have analysis of some broad areas which can help in inflation, but no inflation outbreak is ever the same as the previous one. You know what they say about history? History doesn't repeat itself ever, but it rhymes. Yeah. So the broad themes that I had mentioned, if you want to buy the Singapore market or you want to buy REITs, it is generally safe to say that these are good inflation proxies. A specific inflation index can become too narrow. So for instance, there may be an ETF coming out next year which only does electric vehicles, right? So you might say that is good for inflation, but electric vehicle company can go up and down for reasons other than inflation, right? So there are very few things which are pure inflation.
All right, so there's something else that has been brewing recently. That is the Evergrande situation. From an economic and financial perspective, should we be concerned over here in Asia? Or what should we look out for in the coming days or weeks?
Okay, so there's the spectrum of opinion, right? There's a doom and gloom opinion who says, wow, this is like Lehman Brothers, right? Big bubble blew up, big player has gone down, and when he goes down, there'll be a domino effect. Possible, always possible. There's another side, this is the too optimistic side, who say this is fantastic. This shows that C2C says, I want China's growth to be sustainable. So anything that looks like it's gone too far, I will whack. You know, private tutors, tuition teachers charging too much money, I will ban the industry. Film stars who are selling, whatever electronic games to my children, I will ban them. I will make society stable and safe, and I won't let rich people screw up society. Maybe that includes property developers who make money by trying to force property prices to go up. So this school of thought says this is really good. This guy is intervening from time to time to burst all the pimples. And that means growth will continue peacefully for a long time because the people on the street are happy with this thing. The truth, as always, is somewhere in the middle. For now, we are watching very closely. If you look what's happened, right? There has been a knock-on impact on speculation in a few things. Cryptocurrency fell yesterday. You may ask yourself, Evergrande go down, cryptocurrency go down, why? Doesn't make sense, right? Clearly, some people had margin calls and lost their positions. Hang Seng went down. Why? Because people are reading this sign as, okay, if you're going to slap property developers, then you're going to slap Hong Kong, because Hong Kong is controlled by property developers, right? Third one, obviously, is anyone who had lent money to them. And that's where maybe credit contagion can happen. I think this Evergrande issue has been around for 2 years. It's been talked about. But the bet that people had to make is, will they let them go down? Right? So, or will they just rescue them? So this is in many ways a political situation. It's not an economic situation. And when you trade on politics rather than economics, you have to use a different brain. Yeah, this is not trading on economic fundamentals. You are trading pure politics here.
All right. Next question is May is asking, are there any ESG themed products from SGX?
Yes, soon we will be coming out with our first, which will be a sort of a green REIT ETF. There are many, many things in the pipeline. The one thing we want to be careful of is that if it says ESG or green, both MAS and us want to have some assurances that there is no so-called greenwashing going on. Because you can claim many things about it being ESG, like people make false claims. So we want to make sure that what comes to market, we can hand on heart say, look, this actually does what it says. The REITs that it buys are greener in a concrete, verifiable way, or the companies that it represents are more ESG. So there's a lot that's potentially coming in. We want to make sure they arrive in a proper sequence, so there's enough time for education. But yes, ESG REITs, ETFs are a big focus for us. In fact, at the same time, we ourselves as a stock exchange are also talking to our listed companies to say, you must now start disclosing in a way like report your ESG performance the same way you report your financial statements. Okay, so they have received it very well. Some are very advanced. Some of the property companies have for a long time been going out of their way to report because they feel they do very well. You know, their buildings are, well insulated. They have energy stars. They have good labor standards. So actually, if you're doing well, you want to boast. And quite a lot of our Singapore companies are doing well. Their standards are high. So our message to them is, if you're doing so good and you are really flying the flag high, you should boast about it. Because all the investors around the world would be like, I would love to buy a quality company in Asia and promote and reward their behavior. So ESG products will come. I would say watch it carefully. Just because it's ESG doesn't mean it will outperform, right? But if it does say ESG, it is very likely that it's doing what it promises to do. You can't always
All right,
do
Michael.
good and make money, right? You can't always do good and make money.
Of course, of course. Well, the other question that we have is, you talked about value stocks and growth stocks. So, I mean, while we have seen growth stocks grow to a very, very high level, prices are probably too high for most to go in right now. Are we looking at the value of value stocks right now because the prices are lower?
So the most compelling analysis is not about the absolute price of value stocks or the absolute price of the growth stocks. They're looking at the ratio, right? The ratio has never been as stretched as it is. Like if I had $1 to put into a growth stocks, maybe I should put $1 or even just 50 cents into the value stock, because over time I might get the same return. So what people are saying is that this ratio has never been so stretched And over long periods of time, the ratio usually moves up and down and up and down like that. It's mean reverting, right? So what they're saying is right now, do you believe that growth will permanently be growth and value will permanently be value? And a lot of economists out there say no, all things come in cycles, right? So one of the biggest observations is that growth stocks are cheap historically based versus growth stocks or momentum stocks. And a lot of it's just to do with zero interest rates.
All right. Well, this question is for industry veterans, both of you. Just to make it clear, in case the members of audience think I'm included in that special group. What's your? We have discussed beating inflation in Q4 today, and we've shared many strategies, including inflation hedges. We touched on ETFs, ESG. What would be the key takeaways for this session? What do you think are the key takeaways for the audience to take back and ponder about? Let's start with you first, Chern.
Key takeaway. Actually, today Mike has put in different dimensions into investment. One, tech versus value stocks, right? The other one is on the I would say on the REITs portion, that somehow the story about Singapore being the REITs, I think is very true. People that wants to have a exposure that is beyond Singapore, beyond the Singapore, like the normal REITs, like commercial REITs. There's other REITs, including Mike mentioned about student housing, about the student hostel. I thought there's something for us to consider, because it's true. People are talking about economy opening up, even in Singapore, right? We are opening up. My friend from London, yesterday we were just chit-chatting about it. A lot are actually not wearing masks. Another friend that I just spoke to yesterday as well from Denmark, they are saying that they are not wearing masks anymore. Basically, the moment you hit a certain percentage of vaccination, life really, everyone is trying to go back to normal. And it's true that some of these countries are really pushing back into normal. So when it's mentioned that students will start going back to UK, Australia, and this is something that we should think through, and it could really make a good investment case, for our own personal investment, right? And I think Mike also addressed the other portion about currency hedge. Is important. It's true, it's important, because Sing dollar has always been very strong, but the return from such overseas investment could more than outweigh the changes in the currency, the FX rates. And in any case, there's also mechanisms like in SGX, you have the RMB futures, you have the rupee futures for investors to hedge such currency exposure as well. So I thought for me, right, even for me, one of the key takeaway is look at some of these REITs that offers more than just some of these in Singapore. Mike mentioned about the data center type of REITs. Also talk about, like just now what I mentioned about the foreign student hostels. There's something for us to investors to take back as well.
All right, Michael.
Q4 is a very short horizon, so I think the only reasonable thing I can say is I can't give a recommendation. I can tell you what retail on SGX is doing, and I can tell you my largest holding. Okay.
Okay.
So retail, the behavior has been interesting. I must say, in the past 18 months, retail has got it right, because the market dropped a lot and went up a lot, right? So in Singapore, retail got it very right, because on the way down and near the bottom, they bought a lot, and they bought the usual things, the value names, the high quality names, a lot of ETFs. Institutions sold, right? So now institutions are buying back and retail are taking profit. So in the last 2-3 weeks, the main flow we are seeing is, believe it or not, they are trying to buy the dip in China technology. China had this big clampdown on data and technology. It fell about 20%. But in one or two of the ETFs which do China technology, we are seeing retail buying. It's just a bet. right? So this is a trading position. I'm not recommending it. I'm telling you what people are doing. The second one is very strong feelings on both sides of REITs. Today, especially, big, aggressive, oh, property is going to zero, this Evergrande is terrible, institutions. On the other side, retail is like, wow, you know, I'm going to buy. So one of them is going to be wrong. Huh? We don't know which one's going to be wrong, but there's very strong disagreement about REITs. And I like strong disagreements because it leads to volume, it leads to conflict until somebody is right or wrong. As for me, my biggest shareholding is in this company called SGX. The dividend yield is not bad. I know some of the managers. I know some of the partners. My second biggest holding is in a Chinese government bond ETF. That one has done very well. It buys Chinese government bonds. Chinese government bonds is as safe as you get because if the Chinese government doesn't have money, they just print more, right? They're literally paying you with their money. But the RMB has been very strong. It's weakened a lot recently, and the interest rates are high. So I like it because it's very diversified from other kinds of bond markets. Yeah. So that's what people in the market are doing, and this is what I own. I would second what Chern is saying. Like, regardless of how inflation or recovery opens, whether it's fast or slow, there is something to be looked at in REITs. And if you don't want to pick individual REITs, the REIT index, the ETFs are interesting place to look.
Yeah. All right, thank you so much, Michael.
I like Mike's number one pick, SGX, and I know that it's run by a very good and strong management team.
Absolutely. Thank you so much, Michael, and Chern, thank you for your insights as well. And that's all we have time for beating inflation in Q4. There's some questions that we didn't have time for. Rest assured that we're sending them Michael's way so he can just draft some pointers with regards to the questions, and we'll get back to you in our follow-up email. All right, thank you so much for being a wonderful audience. Till our next Beating Inflation series. See you then. Take care.
Thank you for having me.
Okay.
All right.
Thank you.
Good night, guys.
Good night. Bye-bye.